Okay, in this video, there are going to be three basic things, or should I say two basic things you're going to take out of this video. Now you're going to understand candlesticks, and then some candlestick patterns, basic candlestick patterns, right? So that is just the basic reason for this video. So before we go to the video, I would like to explain because this is just the basic introduction into technical analysis. I've discussed or talked about fundamental and sentimental analysis. No need to go back there. So before we start, we need to know like this is just the overall layout. And now this is just how the chart look like. Right, this is just how the chart look like. This is trading view, right? The 15 minutes time frame. Right, this is just how the chart looks like. And you can see there are different time frames. I'm going to explain about time frame later in the day, but with time you're going to understand it. So you need to know that there are different types of charts. Basically, we have bar charts, candle charts, candle. You can see different. So you can just look at if you go to your trading view, you can look at them. So we are going to basically be looking at this Japanese candlestick because this is what majority uses. This is what we use majorly in technical, when we're doing technical analysis. So first of all, you need to know that the candlestick gives there's a lot of story, right? And basically the major characteristic of a um candle is basically this is just how it looks like, right? This is just how it looks like, right? So basically, this is the low, this is the high, this is the low, this is the high, this is the then the open and the close now. This place now and this place now can be the open and then the close. So now the open and the close can interchange, right? This can be the open, or sometimes this can also be the open. This can be the close too. Now, what is going to determine? So, what is going to determine the open or the close is the type of candle it is. Now, we have basically two type of candlestick. We have the bullish candle and then we have the bearish candle. Now, what does the bullish candle represent? The bullish candle basically represents um the bulls. Who are the bulls? The buyers. The buys. You understand? So you need to take that now into note that anytime you hear bull, anything relating to bull is buy. Then anything relating to bear is sell. So with that being said, if this candle now is in this up is in the is a bullish candle that is in an upward direction, that means it went up, right? If this candle went up like this, right? That means this is where it opened and this is where it was closed, right? So the reverse is the case now. Let's say, what of if this candle now is a bearish candle? That's if what of if it went down? So if it went down, it's still going to look the same, still going to look the same, still going to look the same. This is still going to be the high. This is still going to be the low. But this time around, the candle what faces down, right? The candle is what downward. So this time around, the open is going to be what here, and the close is going to be what here. This is going to be the close. This is going to be the open. Can you see their difference? Can you see the difference now, right? So what if we say, okay, now let's mark all our down candle as X, and then leave our um up candle to this color, just blank, right? So it just that is just, you can see that is just what the candle stick represents. This is just the basic information it's telling us. It's helping us differentiate in color. It's also telling us the open, high, low, or close. Just take note of this. Open, high, low, and close. Or open, low, high, and close. You can just take note of this. OHLC, open, high, low, close. Just take note of this. So then the settings of the candle is now going to determine where the position is going to be. Right? I hope this is clear. I hope this is clear. So now let's clear all drawings, and then let's see. Okay. Now let's go back to the candle. Now looking at this now, with that same explanation now, let's just explain. Let's explain from here down to here. So now, okay, this first candle now, you can see it, this is the low. Okay, let me, okay, this is the lowest, this is the highest I can zoom. So okay, let's go for wait. Let me see if I can go full screen. Okay, let's go full screen better. This is better. Nice. Okay, so yeah. So now looking at this candle now, this particular candle here now, this one, you can see the low is very, very, you can see the low here, and it's very, very small, very small. And this is what this candle now. Now the way I present my candle chart, blue is up and black is down. So this candle now is blue, so it went up, right? It went up. So this is the open. This is the open. This is where it closed. This particular place now is where it closed, and this place now is the high. So this whole place now is what you call it is the body, the real body. You get this is the real body. You understand? So let's go back to the next. You can see the candle first created a low. It's just like if I want to stimulate, you see how this thing is moving now. See how it's moving, small, small moving. So what this candle did now was it opened here, it opened here, and then it dangle, 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 it went down, dangle, 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 dangle. It come up back, dangle, dangle, dangle. It went up, went up, went high, and then come back here, and then close here. So that is just basically what this candle did here. This particular candle now, this is just exactly what it did. It opened here, it went down, it went up, and then it closed here. So you can see it. This is what the candle did. So similar to this one, you can see open here. See, it closed here. Immediately it closed, another new one open. And then it down, went up, came down again and closed here. Then this one now open here. You can see this one open here. It went high, came down again, and then it closed here. And immediately closed here. This one then open here. So it just goes like that, like that, like that. The cycle continue and continue and continue. So what you just need to take out from this is the O, H, L, and C. The open, high, the low, and the close. So that is just basically what you need to know in a candle, right? So if they ask you where is the opening price of this candle now, okay, they ask you where is the opening price of this candle, you know this is the opening price. If that's where is the low, this is the low. They ask you where is the high, this is the high. Where is the closing price, this is the closing price. So that is just it. So moving on to the next, I'm talking about some basic candle patterns. Some basic, because we most of the time some things will occurs and occurs and occurs again. So there are some patterns that happens in the candlestick, and these patterns signifies some things, or they mean something. So it's not necessary to learn all the candlestick, but it's not going to be bad if you know all of them. So, but I'll just be picking majority of like the major one that you will use later in the day. So the first one, remember, before we even move forward now, before we move forward, let's talk about trends, market trend. Let's talk about market trend. So basically, market trend is just which direction is the market moving. That is just what market trend is. Which direction is the market moving, right? Which direction is the market moving? Now, when we're talking about trend, there are basically three types of trend. Basically, three types of trend. Now, what are those trends? We have the uptrend. We have the downtrend, and then we have the ranging market. So now these three now, that if you're looking at it in this kind of way, market type is going to be divided into two, right? This is going to be trending market, and this is going to be ranging market. So this trending market now is divided into two, which is the uptrend and then the downtrend. So we now pick it as one, two, three type of what market trend. But in reality, it's divided into what? Into two. So this is trending market and this is ranging market. So trending market now is divided into up trending markets, down trending markets, or we have ranging markets. Hope it's clear. So now let me now pick each of these 1, 2, 3 and explain them. Now, U, which is equals to what? Uptrend. What is uptrend? Basically, like the name implies, up, something that is going up, something that is going up. So basically, when the market is going up or is moving in an upward direction, we say is what? An uptrend. Now, reverse is the case for the downtrend. The downtrend is the opposite of what? The uptrend. The downtrend is basically when the market is what? Going down. In a downward direction, right? It's in a downward what direction. So we say the market is in what? In a downtrend. Then what is now the ranging market? Now the ranging market basically is when the market is what? Right. So when the market is what? Range, in a range. Basically, this is what it looks like. When the market is in what? A sideways direction. We don't know whether it's going up, but you don't know whether it's going down. It's just going in just sideways, jaga, 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 jaga. You don't know whether it's going up or you don't know whether it's going down. So now, let me still explain what further on this uptrend and downtrend. Now, there are some characteristics that they have. There are some characteristics that they have. Now, in an uptrend, we know basically that the market goes up, 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 right? So now, this is just basically what it looks like. Textbook setup. This is how it looks like, right? Because the market does not just go up. No, no, no. It does not go like that. The market does not go like that. The market does not go like that. It goes up. It will go up small and then come down. It will go up small and then come down. To go up small and then come down. Go up small and then come down. Go up small. That's just how the market does. Now, what is the characteristics? Now, in an uptrend, it first creates a what? A low and then a high, right? So we don't know where this let's just say we don't know where it started from. But for we to call something an uptrend, it has to first create a low, a high, and then a lower low, and then what? A higher low, I mean to say, a higher low, a higher low. Because why is it higher low? You can see that this low here now was not taken out. You can see that after this high, then you can see that this low came down. But you can see that this low, this one is higher than this one. So that will call it higher low. And then after that, we create a higher high. A higher high. You can see that this high now is higher than this high. right? So that is just how the name implies. So it's a series of higher lows and higher highs, higher lows and higher highs. That's just the basic characteristics of an uptrend. They tell you what is the characteristic of an uptrend. It's basically a series of higher low and what higher high. That's just the basic characteristic of what an uptrend. I hope it's clear. So, what of in a situation like this? A situation like this, is this an uptrend? This is what a low, a high. But you can see, okay, now looking at this now, uh, you cannot ascertain if this is an uptrend or what type of trend is this, because an uptrend, it needs to what create a what a higher high. There needs to be a higher high, right? There needs to be a high taken out and a low and a high, right? So basically, there need to be a low, a lower low, and a okay. In this instance, we can say this, we don't know where this came from. Okay, we can say this is the low, you can say this is the high, and then this is the lower low, and then this is the lower high. Then you can yes confirm that this is what's an uptrend. So I hope this that one is clear. Okay. So let's go to the downtrend. Let's go to the downtrend. Okay, let's see. Okay, for the downtrend, basically we know how it looks like. It is basically something like this, right? Something like this, right? Going what down, always going down. So now in a downtrend, what's it made of? What's the characteristics? We have a what? A high, a low, a higher low, a lower low, right? And what? A, a lower high. Now, let me explain. So, we don't know where this is coming from. We don't know where this is coming from. We just know that it's a high and a low. What? A high and low. Then a low is created, right? And then a high is created, right? You know that a low and a high, right? So what happened next? Then we see that we got a low that is lower than the first low, right? So this is what a lower low. Then next again, we came and we saw a high, but the high is lower than the first high, so we call it a lower high. So basically, what's the characteristics of a what a downtrend? Basically, it's what a lower low and a lower high, right? So that is just basically what that means. So then for the ranging market, it does not have any characteristic. What we just know is that it's just a sideways movement, right? A sideways movement when price is moving sideways. So that's when the price is ranging. So I hope it's clear: uptrend, downtrend, and then ranging market. So now looking at these three types of markets now, or market conditions, the best one to trade is what the uptrend or what the downtrend, because in the ranging market, we don't know where to, if you have to, okay, we didn't want to buy or we didn't want to sell, where do you want to buy, where do you want to sell? So basically, it's not advisable to engage in the ranging market. I hope that's clear. Okay. Now moving back to candlesticks and how it's relating to this trend and what's the relationship. So basically, we have some candle patterns, right? Some candle patterns, some candlestick patterns. I've shared it. Okay. Yeah. So like I was saying before, the candlestick, we're going to talk about some few candlestick patterns. So there are different candlestick patterns, but I'm going to talk about the few main one. So the number one on the list is the engulfing pattern, right? The engulfing candlestick pattern, right? So basically engulf, when you talk about engulf, cover, cover. So basically this is when a particular candle covers the other what candle, right? I see. It covers it to the what the it covers it to the left. You right, get covers it to the left. You can see you can see that the left candle is completely covered. You can see this one, this candle stick, and then you see the next candle what covered it entirely. See this one like, is what the bullish engulfing. And this is what the bearish engulfing. So in essence, the engulfing is a type of candlestick pattern whereby the candle, like the first candle, is covered completely by the second candle and it's divided into two. We have the bullish engulfing and the bearish engulfing. Okay. So the bullish engulfing signifies bullish intention. That is telling us that um, um, markets want to go up. Understand? There's more to it, but in essence, what is just the information is trying to tell us is that market is about to go up. Similarly, for the bearish candle, reverse in the case, it's trying to tell us that market is trying to come down. Understand? Market is trying to come down, right? So, I'm going to show some example of what the bullish and then the bearish what engulfing. So you can, so when you see it, you can like, you know, let me take this, all this out, let me clear out this. Then let's go to the chart. So let's go and forward bullish engulf. Now you can see this is what the bearish engulf. You can see this candle, and the next candle was covered. The next candle covered it completely. That's it. That's it. Okay. So let's see. Let's look for more. Uh, this is also it again. This bearish engulfing. Okay. Let's see. Let's see. This is what's bearish engulfing. Okay, so this is bullish engulfing. You can see this candle and see the next candle completely cover this candle. So this is a particular bullish engulfing. Let's look again. Let's do. So this is what the bearish engulfing. So I'll employ you. I want you to go to your charts on the trading view and then look for places where you see the bullish engulfing and look for places where you see the bearish engulfing and notice what happens. And notice what happens after the you see that engulfing the pattern. What happens next? Does the market, does the price goes up or does the price goes down? You understand? Just note it down. Okay. So moving to the next, we have the yeah, the next is basically something we call the doji. So the doji, how does it look? Basically, what the concept of the doji is basically price open and close at almost the same price. So what does it mean? Let's say price may do like this, it does do like this, may come in this form. It's come in this form. It may also come in this form. Okay. So now, basically, what this is showing us, this is the opening price and the closing price is the same place. The open price and the closing price is the same place. The open price and the closing price is the same place. So the price open and close at almost the same place. So that is what we call the doji. So now, what does this signify? It signifies indecision. So like it is like buyers and sellers are fighting and nobody is winning. It's just like equal. When two people are fighting and they just we got something we call like draw. So we don't know who is in charge yet. You understand? We don't know who is in charge. So that is just basically what the doji is all about. Then another type of that is similar to doji is something we call the hammer and the pin bar. So the pin bar looks something like this. Pin bar looks something like this. And then the hammer looks something like this. So basically the pin bar is almost similar to this in the doji format, and the hammer is almost similar to this in the doji format. Remember, these three are doji, but this is pin bar and this is hammer. Now you can see the pin bar, it is having a open and close price that is different, but they are very, very close, very, very close. So the body is very, very small compared to the wick. So all this, the high and the low, we call it wick. So this wick now is usually longer than the body, sometimes two times the size of the body. That is the characteristics of the hammer and the pin bar. So this one signifies what a bull, and then this one and the hammer signifies the bears. You understand? So in summary, I don't want to waste time. In summary, doji is 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 signify indecision, like there's nobody decide, nobody winning. Then under the doji, this is the three formats it can come in. It can come in these three formats, right? Now, under that doji, there's something we call the hammer and the, remember, the doji has opening price and the closing price the same place. But there's something that is almost similar to the doji or is inside the doji family. But this time around, it is not in, like the open price and the close price is not the same place. It's just like the body is very small. The body is very small. You understand? The body is very small compared to the wick. So now the pin bar is the bullish version of the doji, and then the hammer is the bearish version of the what doji. So that is just it. So let's check and see if you can see one or two on the chart. So let's see if you can see one or two. Okay, now you can see this is a doji. This is kind of a doji. This is a doji. This is a doji. But you can see that the opening price and the close price is kind of, it's not the same place, but it's kind of similar. So it's still under the doji. Okay, so I'm trying to look for the, okay, you can see this is the hammer. This candle here is a hammer. Hammer, hammer, right? This also is hammer. This is a typical example of hammer. This is also a typical example of hammer. You can see how long the wick is. I can see how small the body is. Okay. Looking for a pin bar. Looking for a pin bar. Looking for a pin bar. Let's see if you can see a pin bar. Can you see a pin bar? Let's see. See one. You can see a pin bar here. This is a pin bar here. This candle right here is the pin bar. This one here is a very good example of the pin bar, right? It's very good example of a timber. So I think that is just all. I don't want to waste time. Just go through the manual I sent. All these things are very, very basic things. Just try and go through the manual I sent. I just want to just like talk on it. So you can just get an idea of what it looks like. So another candlestick pattern I want to talk about is what we call the harami. So the harami is just like in it just meaning pregnant. Harami means pregnant. So what does it mean? It's just like when a something like this, um, something like this. So when the candle in the front, remember the bullish engulfing is something like this, right? Engulfing is something like this. But I think I made a mistake in this harami. I think I made a mistake. It's almost similar, but I made a little mistake. I made a little mistake. So this is what the engulf will look like. This um this big candle covering this small candle. But this harami, it is this kind of this is what it looks like. This is what it looks like. This time around, the small candle is in the front. This time around, the small candle is what in the front. You understand? That's all the difference. This is the bullish harami. This is also a bullish. This is a bullish engulfing. This is a bullish harami, right? This time around, what the big candle is what is in the back, right? And the small candle is what in the front. And you can see that this one have covered this one. This one covered this one to the front. So that is just the two difference between the engulfing and the harami. So that is just it. And they mean almost the same thing, but the engulfing is more stronger. The engulfing is more stronger than the harami. Okay. So we also have the morning star and the evening star. Okay, that one is going to be an assignment for this video. Just to a check that you watch this video. I want you to explain what the morning star look like. Go to that manual I sent for you and look for where they write the morning star, and then you explain it for me after you finish watching the video. So I'll know that yes, you watched this video. You understand? Okay. So assignment, go and read on the what morning star. So the last thing I want to talk about, just talked about, if you want to know more on the candlestick pattern, you can go through those materials I sent, right? Go through those materials I sent. So the last thing I'm going to talk about here in this video is something we call support and resistance. I'm just going to give you the concept of what it looks like, of what it entails, support and resistance. So now just imagine this is a house, right? Just imagine this is a house, right? This is the roof, right? This is the roof of that house, right? This is the roof of that house. Don't know how to draw. This is the roof of that house, and this is the floor of the house. And then you throw a ball inside this place now. So if the ball bounce here now, where is it going to go? It's going to go up, right? And the ball reach the ceiling and bounce, it's going to what? Come down. So it's going to keep on bouncing, bounce, 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 until it stop, right? So in Forex trading, this floor now is what we call support. And this top is what we call what? Resistance. So what does this mean? This means that support what is a place where price tends to what? Bounce and then reverse up, right? Price tends to bounce and then reverse up. And then resistance is a place where price tend to bounce and reverse down, right? So this is the basic two difference between what? Supports. This is the support, and this is the what? Resistance. Support and resistance. All right, support and resistance. So when we are going more advanced, all this is just the basic. I want to just rush to the basics All this is just the basic. Just if you can go through those materials, it's going to help really. Because I cannot start like explaining the basics because and the basics is not something you just need to know it, but it's not something you're going to be using more often. It's the advanced stuff you're going to be using more often. But it's very, very advisable that you know it. Understand? So in essence, in summary, the support is just like the floor in the house, and the resistance is just like the ceiling in the house. So now, okay, let me clear all this now. I want to explain something again. Now, let's say now this house now is a two-story building or a one-story building. So that means the house have upstairs. The house have upstairs. Okay. So the house have upstairs. And then this is the roof. This place now is the roof. This is the roof. So yeah, when the ball is here now, let's say there's a ball here now, and the ball is what? Bouncing. And let's say the ball bounce here now. You know that when it bounce on the ground, which is the word support, it's going to go up. And when it go up and reach the resistance, which is the ceiling, it's going to what? Go down again, right? It's going to go down. So what if it now bounce in the support and then it break the resistance? What do you think is going to happen? Now, what is going to happen is, remember, when it reach the resistance, when it reach the ceiling, it bounce back. But something now is like when the thing bounce back, it now hits the the ground again and burst the ceiling. So when it burst the ceiling, it's going to what? Stop, bounce back here. It's going to bounce. This place now is going to be the new floor. This place now is going to be the new floor. This place that was ceiling now is going to be the new floor where price is going to bounce and then go up. And then when it reaches the new ceiling is going to what? Bounce back. So that is just how it works in the forex market. Remember, it goes up, down, bounce, down, bounce. So there's some sort of support and there's some of resistance. So sometimes if it's an uptrend, the ceiling is always going to be burst. Price is always going to burst the ceiling. See, the ceiling that is your price burst it, came down to the new floor, came down to the new floor and bounce and burst the new ceiling again. Like that. So in uptrend, price always tend to what? Burst the ceiling. But in a downtrend, price always tend to burst the floor. So what this is telling us is that this concept of support and resistance, a support or a resistance can switch. So let's say this is a place, this is a place, and this is a place. So let's say in an uptrend now, price can just come, bounce on the support, and then reach a resistance, and then bounce and come back. And then it can bounce, break the resistance. And when you break that resistance, this resistance, this place now is the resistance here. Because it was when price reach a price bounce back. So as price break this resistance here now is going to turn to support. You see, it has turned to support, right? Before here now, it was resistance, it pushed back the price down. But here now, after price burst it, right? They have turned resistance, right? So this place that was a resistance before, now I've turned support. Price is now going to bounce it and go up. You understand? So that's why I said support can turn to resistance or resistance can turn to support. It depends on the trend. So because we know that the market cannot just keep on going uptrend like that, uptrend, uptrend, uptrend. There's a time the price is going to what? The trend is going to change from uptrend to downtrend. You understand? There's a time that the market is going to change from uptrend to downtrend. So a support can turn to resistance. Another example. This is support, resistance, come back to support, resistance, and then a break. After a break, this resistance before that just turn to what? Support. So the support pushes price up and goes to the resistance. The resistance bounces price back. And this support, this place now that was resistance before now, that is now is support. Now bounce price up and go back to the resistance. And then resistance now use force now and break past. Remember, this place now was support before now. Now it have break. Now it go to the former resistance, this former support that is in this place. So this place that break here, here, here now it is resistance. Here it is support, right? So this resistance now break it down. Here now it is what support, right? Here is support because it's pushing price up. Here is support, it push price up. So now that this place break down now and bring price to this new support. This place that was support now is going to what turn to what resistance. Price now will come here and bounce off. This place that I support now will turn to what resistance. I just hope you get the concept of support and resistance. So support can turn to resistance and resistance can turn to support. Just like break and retest. Break and retest. So that is just basically the simple explanation of what support and resistance. I just hope all this is clear. I hope all this is clear. So I'm waiting for your questions and I'm waiting for the assignment. Okay. So I think that is going to be all for now.